Good day, ladies and gentlemen. Welcome to another episode of CoinNewsExtra Interpretation. It's a program where we invite blockchain and fintech innovators, enthusiasts, and people doing amazingly well, stakeholders in the ecosystem to talk about matters arising their field from the ecosystem and the state of blockchain and fintech. Today, I have with me a great innovator, an expert in the space. I have Kenneth A. Goodwin. Kenneth A. Goodwin is the managing partner and founder of Genesis. Kenneth, you're welcome to CoinNewsExtra.
Yes, well, thank you very much for having me on CoinNewsExtra Global. I appreciate it. It's some very challenging times, but anytime you have challenges, you have an opportunity and an opportunity to grow. And that's a good thing. I just wanted to add that Genesis, we've been in the blockchain digital asset space for the past 5 years. And we're going to be launching a 144 Global Trailblazer Fund that targets early stage A growth and value funds, mainly within the fintech, red tech, artificial intelligence, and enterprise blockchain space. 10 to 15% of the assets under management is going to be deployed towards underrepresented founders, and those include people of African American descent, Hispanic descent, as well as Native Americans, women, and everything else. So we're looking forward. We're excited about the opportunity to deploy some capital. We're right now in the midst of raising it and working on a global syndicate that includes other venture capitalists, both in California, here in New York City, also in Africa, as well as in the Caribbean and Asia. So we're looking to increase the assets under management from 150 million to about 200 million, and hopefully start to deploy that next year. So we're right now, we already have firms in our portfolio. Right now we have anywhere between about 30 to 40 firms. We may increase that additionally to about 10 to 20 other additional firms to invest in capital. So we're looking at writing checks of anywhere between 500,000 to about 2 million and above.
Interesting. Nice to have you on board. You are doing amazingly well. So you are joining us from the New York. So how is New York today? The election by the corner. How is it over there?
You know, it's a different city than what it had been before. You know, New York City is very vibrant. It is the financial capital of the world. You know, I spent most of my life here in New York City, born and raised in Hoboken, New Jersey, which is right across the river of New York City. I started my career at the Federal Reserve Bank of New York. So I was a central banker myself for about 10 years. And then afterwards, I spent a lot of time working at some major bulge bracket banks, RBS, HSBC, then at Grant Thornton. And Genesis, our first office was on 110 Wall Street. So we were on 110 Wall Street. And so we know what it is to be in New York City, to work with a lot of the family offices, venture capitalists, hedge funds, a lot of the investors. And the city has changed somewhat. We hoping that the city will start to open up again gradually. Companies, unfortunately, are losing businesses. So that's the downside to it, but there's some opportunities that could be picked up. And from what I'm hearing, a lot of the information technology firms are buying the real estate in New York City because real estate is dropped. The value of real estate, at least the commercial real estate, has dropped significantly. So that became an opportunity for a lot of the information technology firms like Google and Microsoft and these other firms, Amazon, are coming to New York and buying up office spaces. So that's a great thing there. So you're starting to see a trend going towards digital transformation and information technology.
Interesting. Nice to have you that New York is doing amazingly and has innovation. So we are looking at blockchain from investment point of view. We've been able to see people are seeing when we talk about blockchain, the first thing that comes to people's mind is cryptocurrency, not knowing that there are numerous investment and business opportunities are found in blockchain technology. So we've been looking at it. So what are some of the investment opportunities in blockchain?
Yeah, that's a great question. I always look at it from twofold. I always try to separate when we say blockchain. I always separate it from the actual digital currency itself and the actual technology itself. So it's really look at it from two sides. The digital currency is what most people get involved with Bitcoin, the whole notion of Ethereum, so you have the coin structure. So you have people, a lot of people go on Coinbase, Coin Market, and they invest in that area where they want to constantly trade these currencies. And that's great. I think that's a good idea if you want to expand your portfolio and diversify it from the traditional ways of gold and silver and stocks, and you want to diversify that into, let's say, Bitcoin or other alternative coins that are out there. The technology side is actually the side I like, because I think that's the side that actually brings a little bit more value, because now you're looking at companies. So companies may have an idea and they want to go in and they want to solve problems. They want to provide solutions to both the consumer side as well as the commercial side. And I'll give you an example of a firm that's like that. And I'm not promoting any company today that could be a firm that would be a potential investment, like Hedera Hashgraph. Hedera Hashgraph, they're ranked in the top 100 on CoinMarketCap. They do provide solutions for enterprise. So they do provide an enterprise solution, and they integrate blockchain systems. So they use data to help, they built the blockchain rails, and they also manage the data on it. And I think in that sense, when you look at institutions that have challenges, both the large cap firms and the central banks, the biggest challenges that they have is from an infrastructure standpoint. They want to manage their data correctly. So blockchain technology is one of the better solutions that are out there. So as these companies, as they win new contracts, as they win new statement of work, they create value. So it's not that they're just relying on a token value. So let's say Hedera Hashgraph, they have a token value. They're ranked in the top 100. So they value from a token standpoint, but they're also winning contracts and they're increasing their revenue base. So as they increase their revenue base, they increase their potential to be invested at a higher levels. And I think that combination of both is very appealing for investors. These are the type of firms that could actually last for a long time. You can invest in them at different stages. So they can go from stage A to stage B. You can invest at them when they want to raise capital at 20 million or 40 million or above. And then eventually, if they decided that they want to, let's say, list on some exchange, they can list on the blockchain exchange, but they also have a potential of listing on the actual public exchanges too, because of the fact that their valuation has increased. So those are the types of firms that we tend to look at. Firms like Nexo.io. Nexo.io is a firm that's based in Europe. And when they first came out, I was on the board originally of that company. So I look at Nexo.io as a firm it's a value-driven firm because they're providing a product that's geared towards the consumer. And that product is your ability to purchase and to sell digital currencies on a platform via wallets. But they also provide trust services too. So they work with a bank that's part of that ecosystem that actually stores and safeguards against those assets. So as they onboard you as a client, they charge a fee for those transactions. So that's where the value is. The value is that they're creating revenue with their business model. So they don't just rely on a Nexo token. They also have other sources of income coming in through the actual operations. And when you start actually operating in that way, it becomes a business. And from the mature investor standpoint, now you can not just look at the token, but you can also look at the business that's being done. And when you look at the business, you can say, well, your revenues will grow anywhere from 2 to 3 million, but you really truly value on a 10-to-1 basis 20 to 30 million. And that's great when you can value yourself that way. And over time, that business continue to grow, and you start to use that money to either make better products for product development, segment new markets. Instead of going to Europe, you can go into Africa. You can either merge or acquire with other companies. So there's other good things you can do with liquidity because of the fact that you're managing your cash flow correctly.
Okay, looking at this, we've been able to mention some companies and startup in the ecosystem. So there are this narrative when it comes to blockchain startup and businesses that they are not that much investable. What are some of the things you feel that startups and businesses can do to scale up first and attract more investment, not only into their businesses or startups, but into the blockchain ecosystem?
Yeah, that's a great question. I think what startups, the biggest challenge they have is they categorize themselves as blockchain. And so instead of categorizing yourself in terms of one technology, categorize yourself as a solution, right? Or categorize yourself as a fintechnology firm, a red technology firm, a digital transformation firm, because now what you're doing is you're allowing yourself to be able to market yourself across different types of industries. So I'll give you an example. So you may have the technology, a blockchain technology that solves the problems for supply chain in food, in the food industry. But that food industry, and they need help in terms of data transformation, in terms of data tracking, data sourcing, because the goal right now is to make sure that food is being tracked, right? Food is being priced well, that you're able to use that to connect with different farmers at a farmer level. That kind of services and that kind of a solution could be used towards other industries like the beverage industry, the cosmetic industry, the medical industry. So instead of just calling yourself a blockchain technology firm, you're really becoming a firm that's fintechnology. And you're really addressing yourself across different industries. That creates more value for the solution that you have. I would say that's the first thing to do. The second thing to do is to find at least, a lot of these startups, to find the right partnerships with the right incubators and accelerators. You want to definitely tie yourself with the right, and I said the right one, be very strategic in joining one that actually has an interest of your industry. So what you're finding today is that incubators and accelerators are specializing themselves to say that we don't just want to focus on a general, industries. We want to focus on, let's say, medical industry, medical equipment, or we want to focus on the healthcare industry, or we're going to focus on red technology or smart cities. So find the right match that work, and that could be both at institutions. In terms of educational institutions, they may have incubators or accelerators. I like the corporates. Corporations have incubators and accelerators. And here's why that's beneficial. Corporates, what they do, some of the companies, they may not take an equity stake in what you're doing, which is great because you don't want to give up your equity. Their gain is that they have you in-house as you develop your product and your solution. And they're willing to use that along their platform. And they're also willing to sell that with their client base. So now you're able to test your beta in-house at a major institution. Also, at the same time, you're also partnering with that institution where that institution could sell it to their client base. So that also helps you in terms of increasing your revenues, which is great. So now you can market yourself and say, hey, I work for Morgan Stanley, and Morgan Stanley is allowing for me to sell my product to their client base. So it's a win-win for everybody. And I think when you start, entrepreneurs got to start thinking that way. You got to start finding ways to get that money. You need money. People are not going to give you money unless you have money already. So you got to find a way to get money on paper. And it doesn't have to be, and here's the key here. It doesn't have to be money that is actually realized. It could be a statement of work that has a probability of being completed at above 70%. So you can have a contract with a potential client and you have a 70% of completing that. You still have value. There's still value in your statement of work. So get as many contracts as you can and find a value in that. And then you have a value in intellectual property and you aggregate those two together. And that's your intrinsic value as a company. And start off that way.
Interesting. We've seen the way things go in the ecosystem, and what you really said is of importance. You really nailed it. So, what we are looking at, there is another buzzword now, mostly for bankers and the central bankers and nations. The people are now looking at some nations. We've seen the lives of China, we've seen the lives of the UK and Latin America. They are all looking into CBDC, the central bank digital currency. So, or do you think we have two type of people in the when it comes to CBDC? People that are against it and people that are for it. What do you think CBDC will do? Is it going to be a game changer?
It is, but it's just to be transparent, I'm a former central banker myself, from the Federal Reserve Bank of New York, and I was at the Federal Reserve Bank of New York for 10 years. I'm a Mike Mansfield Fellow, so I spent time at the Bank of Japan, doing research at the Bank of Japan, as well as the Japan Financial Service agencies. So the idea of a central bank digital currency, that's actually nothing new. It's really nothing new. It's been researched on longer than what most people have led to believe. And I said that at the first Blockchain Economic Forum in New York City in around 2017. I gave the example that the central bank, they were already looking at the idea of a specialized marketplace. And I give you an example in two occurrences. One is through the Term Asset-Backed Liquidity Facility Program, known as TARP here in the United States. So when the economy took a big dip in 2016, which some people call it too big to fail, but TARP had multiple different programs, and one of them was known as TALF. And the idea with TALF was it was targeted towards the asset-backed security and commercial mortgage-backed security industry. So really looking at the housing market. So a lot of these major banks had exposure to the housing market. The key with that was that they had a large amount of what they call leverage. They were double leverage, meaning that their balance sheet was compromised because they had their money tied into all these poor assets. So essentially, a lot of the major banks, they were not borrowing among themselves. And when you don't borrow among yourself, the market doesn't move. So money's not moving. The idea of money moving from one hand to the other hand doesn't happen because your money's tied into poor assets. So the Fed comes along the way and the Fed creates this vehicle known as TALF. And TALF basically says, hey, look, we're going to create a bond, right? We're going to create a bond and we're going to price this bond every day. And we're going to identify who our players are going to be in this marketplace. Our players are going to be our primary dealers. And these primary dealers are member banks of the Federal Reserve System. So you have to realize the central bank is a system of other banks. And those system of other banks, they operate and they work with other central banks around the world. So it's a complex system, right? It's a complex system. So you have these other banks, right? They're part of their primary dealers. They bring along clients, and those clients are your asset managers, your hedge funds, your venture capitalists, and their job is to bring them on this platform. And this all sounds like the blockchain, right? Right? You go from it, even though it's a private platform, but you bring in other members along, right? So, and the goal is for them to bring in cheap collateral in exchange of the bond. So now they can get a piece of this bond and they can sell it among themselves. And so that bond, because it's priced day to day and that bond moves, what it does it allows for the spreads to narrow down, meaning that people are starting to lend among themselves, and it starts to impact other asset classes. So now you see the impact of that price of the bond. Now, if you take that bond away and you put in digital currency, it's the same thing, right? So you put in a token,
Yes.
it's the same thing. You tokenize the asset. So instead of the bond, right, now you have the token, right? So the token protects the
Yes.
bond. It's the same thing. So the idea, the concept of it has been around for a long time. The only difference is that instead of using a bond, you're using a token. And that's what you call decentralized finance, right? So the central bank digital currency, they've been doing research for a long period of time. Mainly, a lot of central banks have been doing it. The Federal Reserve is doing it here in the U.S. They're very familiar with it. They understand that China is using a central bank digital currency. China's doing it for a couple of reasons. One of the main reasons is that it's not the global currency yet. It's still the dollar. Businesses are still done. When you do cross-border deals, it's still the US dollar, even though the dollar is weak. The dollar has been weakening for a period of time. The goal, or maybe the future goal, is for the dollar to be non-existent, but that's going to take a period of time for that to happen. And reality is the dollar is still the global currency. To this day, you go anywhere around the world, you're still able to do a transaction in US dollars. The Chinese renminbi is not there yet, and they know
Yes.
that. They know that already. So, but they need a secondary source of liquidity. That secondary source of liquidity is that digital currency, and it allows them to use that for payments, custody, and settlement. So what China did that was really, really shrewd, and you have to give credit to the Central Bank of China for doing this, is that it allowed the transactions to occur first within their member banks. So when they first created a central bank digital currency, from their research, they allowed the central banks, their central banks, to use that currency to see how it's going to operate. And then they picked out the consumer markets because they wanted to make sure a very small amount to see how that would work in terms of payments, in terms of settlement, in terms of certain products. So they're test running that central bank digital currency slowly. I think the COVID-19 is when that would have actually worked here in the U.S. because of the fact that we had the challenges with people receiving their checks, the paper checks that did not work too well here in the U.S. That's when a central bank digital currency would have definitely worked well because that would have gave individuals money directly. It would have been able to trace and source where the money's coming from, and it would guarantee the fact that people were receiving their money. So in that sense, it would have banked the unbanked, and that's one of the ultimate goals of the blockchain technology, is to provide an opportunity for people to have access to liquidity. So in that sense,
Yes.
that'll work well. This COVID-19 would have brought on, and that actually was written. It was discussed here in the United States Congress, both the Senate and the House. In that bill, discussed the idea of using a central bank digital currency to distribute the funds to the families here in the United States, but unfortunately, it did not pass. However, that would have been a great opportunity for them to use it. Now, here's why that would have been tough in the United States. Understand, in the United States, unlike China, we have multiple prudential regulators. So we have both the Federal Reserve, we have the OCC, we have the Security Exchange Commission, the SEC. We have all these different prudential regulators that's part of the Dodd-Frank Act. And the challenge here in the US, all these regulators, they communicate and they work among themselves. So they have memorandum of understanding to safeguard against the banking and financial industry. So in a way, it's good. In a way, it's also challenging because it slows down the process. So when you talk about using central bank digital currency as a way for helping people with digitally transfer, society, because we have multiple prudential regulators, the decision making tends to be slower here in the US. Where in China, because China, they have a centralized bank that works directly with their centralized government. So monetary policy works hand in hand with fiscal policy in China, and there tends to be a lot more transparency, at least within those entities, because they don't have multiple entities. It's easier for them to make a conclusion. And you find that in most places around the globe. You find that in the Bahamas, Bermuda, in Africa. They're using that as a way because you don't have the multiple regulators to slow down the process. So in that sense, I think because of the fact that they're able to use this central bank digital currency, they can have a secondary source of liquidity. And I think that's going to be a game changer for a lot of those countries.
Okay, interesting to get your view from that angle. Finally, before we draw the curtain on today's episode of Coin News Extra interview session, so you are the managing partner and founder Genesis. So how are you making impact in the ecosystem?
Oh, I'm sorry, I miss out. I heard ecosystem, but before that.
Okay,
What did you say again?
I said you are the managing partner and founder Genesis. So how is Genesis making impact in the ecosystem?
How are we helping out with the ecosystem in terms of what blockchain or in terms of
Yeah,
fintech? Is that
the
was?
impact on services. Yes, the impact on services Genesis is providing in the blockchain and fintech space.
Yes, yes. Now we have multiple services. Our main services is mainly the fund. So we're transitioning away from our traditional service, which was always been financial advisory, and that's foreign direct investment advisory, helping firms to segment new markets, to get them access to capital, access to markets. The fund is actually deploying capital. So what we're doing now is we're going to more of a fund management kind of operations, where the fund is a two-pillar. One side is advisory side, working with the founders, and the other one is deploying capital. Now, helping with the ecosystem on the blockchain side, we identify blockchain enterprise firms. So we don't necessarily focus on blockchain startups. I've done that before in the past. We'll keep our eyes on blockchain startups. We like to see blockchain startups in a lot of the incubators and accelerators. I actually personally, I mentor in a lot of the incubators and accelerators, corporate incubators, as well as educational institution incubators. I tend to do a lot of work with that, and I promote the fact that we need more blockchain technology type firms in those incubators. But we spend more time with firms that are on the enterprise side, firms that are like the Hedera Hashgraphs, like the Nexo.io, like the algorithms, like the Algorands, those types of firms, the Securitize, these types of firms are firms that are providing services not just in the blockchain space, but also providing services in the financial services space. Looking at banks, insurance, broker dealers, those types of firms. They have what they call a business generating model. So they're providing services to a lot of the large institutions, as well as small medium institutions too. So our role right now is to continue to be on shows like this, to promote, still promote blockchain technology, but also be able to talk about like central bank digital currencies, to make sure that people understand what it is, because a lot of people don't know what it is. They help make sure that, let's say, blockchain firms are growing and have access to capital, maybe not at our level. So we're always constantly introducing firms to early stage investors and seed stage investors. That's one of the things that we do in terms of what we like to do more, is to introduce firms to the right investors so they can move up, they can grow in the chain. And as they grow, they can reach our level, and then we can take them and grow them even more. So the goal is for them to grow and to have the experience, not just to exit. Some people want to exit at certain levels. You know, we rather have a value and growth. You know, we understand that people may not reach the unicorn status. If they could, that'd be great. If they don't, that's okay. But we'd rather for you to grow your business because we understand that well, as you grow your business, you are also impacting your community. So you provide the opportunity to hire more people. You provide the opportunity to have a bigger impact. So instead of hiring only 5 or 10 people, you can hire 10 to 20 people, or you can hire 30 to 40 people. And we rather see that kind of growth. And as you grow more and more, you make it to the point where you say, hey, we want to, exit out and sell like the company. I think there's a Nigerian company, a payment company that exit out at 200 million. Now, right. Now, I didn't like it actually. I wanted that company. Here's what I wanted that company to do. I wanted that company to grow even more because I saw that company to be the next, what's the company in Nigeria? I should be ashamed. They're on CBN sites 250. Flutterwave. Flutterwave. I thought they were going to be the next. Flutterwave is value a little bit less than this company. This company is I think 4 times value more than Flutterwave. But Flutterwave has the potential to be a unicorn. So they're still operating their firm. They're growing their market base. They're growing in terms of different parts of the globe. I wanted that company to say, hey, we know that we're valued at 200 million, but we can grow to 500 million. And the way that we can grow to 500 million is by segmenting new markets in Europe, by going to Asia, by going to North America. And now you're increasing your ability to increase your cash flow, your revenues. So now you can go and raise the next round, and that round could be a 200 or 300 million dollar round. And if you want to do, let's say, a SPAC, you want to do a SPAC, a SPAC, you can do a SPAC with, where you can list on the exchange and then buy out another company. And that could be, now you're $1 billion company. So instead of just being 200 million, now your valuation is $1 billion. And now that's critical for that country because it's important for countries to have companies like that. Every country has companies like that. So it becomes viable for that country because now you become an asset for the country. A case in point, where here in the US, we relied on Amazon, we relied on Google. Becomes a strategic alliance or strategic, way for the US government to say, hey, we're going to use our companies to buy another foreign company. That could be the case with Nigeria. They could have used that company to buy other assets with other foreign companies. So that, that's why I wanted them to grow. I wanted them to grow to be the next billion company so they can buy other assets for Nigeria, for their home country. And that instead of being 1 billion, they could be 2 billion, they could be 3 billion. But we have to start thinking that way. We got to stop thinking only $1 million, and we got to start thinking as billionaires. Now, how do we create $1 billion companies where those companies become core assets for our countries? And now they can play chess, and they can say, we're going to use this country, we're going to use this company to buy our other assets. Or in order for you to do business, if you're a foreign country or for a company, you're trying to do business in that country, you have.
Thank you very much. I really appreciate you joining us today on CoinNewsExtra interview session to talk about blockchain from investment point of view. Thank you, Kenneth Goodwin, for joining us today on CoinNewsExtra interview.
Well, it was a pleasure and honor. I'm looking forward to working with you in the future. I like to mention that I'm looking forward to your event in November 6th that you're having. I guess you guys are sponsoring an event there, and I'm looking forward to that. We are considering doing our own event here in the United States sometime next year. And that's going to be on global investing, on doing a syndication for VCs around the globe. And also, there's going to be a central bank digital currency feature to that. So we're definitely looking forward to including you in that event. It potentially maybe with some of the major exchanges like NASDAQ, the New York Stock Exchange, hopefully the Federal Reserve Bank of New York, or just the Board of Governors here in the United States. So we're looking forward to collaborating with you at future events.
Yeah, that would be an honor. We are open for that. Thank you very much.